Positive week overall, but this morning we're seeing the futures and, of course, the AI trade reacting to those Broadcom earnings. You call this another moment of doubt, similar to DeepSeek much earlier this year, and then also Oracle and some of the questions that we've seen about that company as an OpenAI proxy. If we're seeing so many moments of doubt, what does that say about sentiment for the AI trade going into the new year?
Well, I think what we can see with AI and with the trade broadly is that, of course, there's enormous amounts of enthusiasm around what this technology means for the AI names and for the economy overall. That gives us an upward trend. But there's a long build out. The capacity takes time to come online. There's, of course, circular financing. There's a lot of money that has to go into this. And it just lends itself to periods of time where investors question how this all comes together. And that's what we saw with DeepSeek, where folks were questioning how, whether the models could be run more efficiently. Now we're looking more at circular financing. And I think we're going to have to grow accustomed to these periods where volatility takes center stage, when these questions really start to bubble up, and when sentiment and valuations have gotten stretched as they did heading into these periods.
We saw in the early part of this bull market, fueled by this AI trade, that investors seem to be picking the winners, and we called them the Mag 7. Now they're trying to figure out who the winner is going to be going forward. We're going to talk much more about the chatbot race that's going on between OpenAI and Google just a bit later in the show. But when you're talking to investors, how should they be looking for potential winners? It's too soon to tell. A lot of people think we're in the first inning. But how should they be looking for potential winners? What are the criteria that you're looking at?
I mean, this is the trickiest question, is understanding who's going to be a winner and who's not. There's this period that we're in where we're just throwing things at the wall and trying to see what sticks. I think one of the things that we're looking for, at least one of these early signs, has been, where is the revenue actually coming through? And what we've seen, and I think this is one of the reasons why we've seen the performance over the scope of 2025 that we have, is the real winners right now have been these hyperscalers that have been able to recognize revenue on the cloud business and see this kind of transformation of their cloud business as AI workflows are run through their infrastructure. So I think that's one of those signals that you can look for, as kind of these the early signs of revenue. I think when we look at the broader market, of course, we're going to want to see AI deployment across sectors. I think a lot of that's going to come down to potentially first a spend and then an improvement on earnings and efficiency gain over time. And so I think it's watching those numbers come through that's going to give us some sense of who's actually able to monetize this.
All right. So I think the question I've talked with a lot of people about is, why even try to figure it out? We know you're going to need power. We know you're going to need to build facilities. Why not just play it through some of these other cyclical sectors, whether it be industrials, materials, maybe even energy? So, I mean, why even try to figure it out? I think that's the question. I'm sorry. Go ahead, Marta.
No, I think that's completely fair. That this idea that there's kind of related trades that you can play without trying to get whatever's at the epicenter. I think the question on some of those related trades, and something that I come back to, is I think when the valuations are low, it's a great time to move in. But some of these trades, especially in the utilities space, they're just as concentrated, just as dependent on the deployment of AI as some of the companies at the epicenter. So you're still going to want to be valuation aware as you're looking at some of those plays, because they are also somewhat a one-trick pony.
All right. Are we back to risk on? We're looking at cryptocurrency outperforming the market this week. We're seeing people put money in some other just somewhat riskier parts of the market. Are we back to risk on from now until the end of the year, or do you think investors are going to kind of push and pull based on earnings and other headlines?
I guess I'm in the push and pull camp, but when we look at valuations, broadly speaking, they've come off their froth levels, but they're still on the higher end, which means that there's just a little bit less room for disappointment. News can still move stock prices a bit. So I think I'm more suited there. But when we take a look at just kind of what the Fed commentary was, they're updating their growth expectations for the year. There's some enthusiasm, it felt like, in how they were looking at. There seems to be a desire to kind of greater focus on the labor market. So that could be one of the rationales for some of the cyclical stuff coming back.